Welcome to the JD Power AI and Insurance Podcast, where we explore how artificial intelligence is reshaping the insurance industry, from underwriting to regulation and everything in between. I'm your host, Michael Vermillion. Today's guest is Lindsey Klarkowski, Policy Vice President for Data Science, Artificial Intelligence, and Cybersecurity at NAMIC, the National Association of Mutual Insurance Companies. Lindsey brings a rare combination of legal expertise, policy strategy, and firsthand industry experience, having served as in-house counsel for a Fortune 500 insurer before joining NAMIC. In this episode, we'll unpack how emerging AI regulations are taking shape at both the state and federal level, what myths about insurance are driving some of those efforts, and how insurers can prepare for a more accountable but still innovative future. If you're working on AI strategy or compliance, this conversation is one you won't want to miss. So, Lindsey, welcome to the podcast.
Thank you. Thank you so much for having me. It was great to participate over in Chicago at the JD Power AI and Insurance Conference last month, and I love that we get to continue the conversation here.
I do too. Yeah, thank you so much for coming to Chicago. That was a great day, and your panel was terrific. So just as kind of way of background, as NAMIC's Policy Vice President for Data Science, AI, and Cybersecurity, you're at the forefront of AI policy and insurance. Can you share a bit about NAMIC's mission and your role within the organization?
Absolutely. So, as you mentioned, I'm a policy vice president at NAMIC, and we are a trade association with roughly 1,300 member companies, of which represent large percentages of the U.S. auto, home, and business insurance markets. And in terms of NAMIC's mission, NAMIC strengthens and supports our members and the mutual property casualty insurance industry through leadership and advocacy, public policy, public affairs, and member services. And I sit within the public policy team, where we promote policy solutions that benefit member companies and the policyholders they serve. And as you mentioned, my specific portfolio consists of data policy, AI policy, and cybersecurity policy.
Yeah, so your background includes serving as in-house counsel for a Fortune 500 insurer. So how has that experience influenced your approach to AI policy and regulation at NAMIC?
In a huge way. So prior to NAMIC in that in-house counsel role, I primarily advised the operations areas of the business. And at the time I was in that role, AI policy was just starting to heat up. This was prior to the ChatGPT explosion, but the insurance regulatory space in a lot of ways was a couple of steps ahead in thinking about AI. So through that role, I was able to be on the ground and really understand how insurance operations work. But almost as importantly, I got to see how regulatory measures impact that work or the various compliance burdens that result. And I've really tried to carry that experience with me over to NAMIC and view policy issues through a very insurance operations and business focused lens. And given that I'm not on the ground anymore, if you will, in that capacity, I try to keep that view as fresh and up to date as I can by leveraging NAMIC's great membership and really understanding how things actually work and what the resulting impacts of policy are.
Okay, switching gears to the current regulatory landscape. Lindsey, why don't we start here? What are the most significant AI-related policy developments that you're tracking at the state and federal level right now?
It's been quite the dynamic space the past couple of years. In 2024 and now in the first half of 2025, there's been an overwhelming focus on these conversations over bias resulting from the use of AI. And that particular focus and concern has found its way into a number of foundational AI bills at the state level, as well as in work that the NAIC is doing. Now, what I'll note about that focus on bias and bias standards or prohibitions is that the bias conversation or impact is incredibly context dependent. It depends on the use case. It depends on the type of AI model being used. It depends on a particular industry's existing legal structure, what type of bias is being talked about or intended. There's a whole host of things that go into that conversation, and why I say that the conversation is incredibly context dependent. And I did a policy research piece on this very topic that I'm happy to get into later in our conversation, if that makes sense.
So, how would you characterize the current regulatory posture towards AI and insurance? Are we seeing caution? Is it curiosity? Is it urgency?
What I see is primarily urgency and caution overtaking all else. When ChatGPT 3 was released in November 2022, that kickstarted a lot of the regulatory interest in AI. It was the first time that such a large advancement in technology was widely available to the public and available in such a way that you didn't need a technological background to use it. Anyone with access to a computer could hop on and go on ChatGPT and start leveraging that tech. So that wide availability and then the risks that were being associated with ChatGPT specifically, like hallucinations, like explainability, like its training data, you name it, that resulted in lawmakers across the board having a sense that something needs to be done with AI and something needs to be done fast because the tech will keep advancing. So there's your urgency and your caution. And through all of this attention, the largest thing that I see missing from the policy discussions is viewing AI through the lens of it being a tool. Now, AI is a tool with underlying use cases, and if we talk about the insurance industry specifically, within the state insurance codes are robust legal frameworks that can and should already apply to the use of AI in insurance. So, to put it very simply, if an action is illegal under the law for work that is not AI assisted, it also should be illegal with AI in the mix and vice versa. But especially with that understanding that there is that caution and there is that urgency on the policymaking side, especially with AI and insurance, I think viewing AI as a tool can be really instructive. And by way of just one example, if you look at the use of AI in risk based pricing, unfair discrimination is prohibited by law already. Rates must be actuarially sound. Data points must be correlated to risk, and some data elements are prohibited regardless of predictive value. That structure is there, and it doesn't matter if AI is in the mix or not, it applies equally. So, viewing AI through the lens of it being a tool and relying on existing law, what that does is it avoids the danger of dual and conflicting standards, and it's also a regulatory approach that remains flexible and applicable as that technology changes. So, all of that to say, I know that things are being approached with a lot of caution and a lot of urgency. What I would encourage is a lot more curiosity and collaboration with stakeholders in the regulatory space.
Yeah, that's great perspective. So, just one more question on kind of the current state of regulation. Do you
Sure.
see any meaningful differences in how state regulators are approaching AI versus federal agencies?
Sure. Yeah. I'll speak more broadly to both the legislative and the regulatory side of things. So, with the federal government and its approach to AI, that's been a very interesting thing to watch over the past couple of years. With the Biden administration, we saw a very AI safety oriented administration. That administration was issuing a lot of guidance and a lot of direction to its federal agencies to put out AI standards. And now enter the new Trump administration, and we've seen this walk back from what the administration refers to as overregulation and this intent to allow for US innovation and competition with respect to AI. So, with that context, the walk back, if you will, of the current administration has resulted in very active state legislatures with respect to AI. There have been an extraordinary amount of bills filed at the state level this year alone focused on AI. But then you also have our state insurance regulators. And with our state insurance regulators specifically, because insurance is state regulated, they have always had a focus on ensuring that AI and insurance is state regulated. And in doing so, have tried being extra proactive to get something on the books relative to AI and insurance to ward off any other broad sweeping approaches. So there are definitely differences in approach in how state regulators are approaching AI, how our federal government's approaching AI, and from both a legislative and regulatory side of things.
Okay, so that's kind of the current state of regulation. Why don't we move to just exploring some of the practical implications for insurers who are navigating AI regulation. So given the kind of rapidly evolving regulatory environment, what challenges are insurers facing in implementing AI?
I think one of the largest challenges is just that the rapidly changing or evolving regulatory environment and the regulatory uncertainty, if you will, or even in other cases, just perhaps overly burdensome requirements that make it so the juice might not be worth the squeeze. If you think, though, about AI and its foundation being data, and then look at the insurance industry, which is and always has been and always will be a data driven industry, there are a number of different ways in which AI can help augment existing processes or operations within insurance, and really a lot of benefit to be gained. So from a challenge standpoint, it's not a challenge of shortage of use cases, but I do think it is a challenge for companies given the regulatory uncertainty that exists there.
Yeah, so it's really, I guess, about balancing the need for innovation with compliance, right?
Hmm.
Um, but
Definitely.
but how can insurers do that, especially when kind of regulations vary significantly across states and even federal? So what is kind of the secret to that balance?
Yeah, I think much to the credit of our insurance policymakers and our insurance regulators, there has always been a focus on attempting to have requirements be as uniform as possible across states. Now, there are some exceptions, of course, in recognizing unique market needs. I do think that the same focus will permeate the AI regulatory discussions, at least in the insurance context, to avoid the patchwork issue.
Um, to kind of finish off on this topic, then, are there any particular areas of operations, such as underwriting or claims processing or customer engagement, where insurers should be especially cautious with AI implementation? I know we heard kind of one example at the conference where I think the example was given around looking at applications for an internship and HR asking if they could use AI to screen those applications. And I think the speaker at the conference said, no, no way, we're not going to let AI filter internship applications. But any other areas that where insurers need to be cautious?
I think what I would say here is be cautious in the way of knowing that different AI models have pros and cons for different AI use cases. It's really easy to get caught up in the hype of AI, but there are pros and there are cons to leveraging different AI models in different use cases. There certainly are a number of opportunities, from robotic process automation for back office tasks to risk based pricing, both from an insights standpoint and precision standpoint, to customer correspondence. So it's not a matter of lacking potential use cases, but like you mentioned, and that we heard over a number of times at the conference, AI is really good at some things and humans are really good at other things. And then there's this opportunity for human work that's AI supported. So, much like my message to policymakers, I think here it's understanding the different AI model types and the different AI use cases, and just be cautious in that way and be really intentional about where you are putting AI in.
Yeah, you mentioned risk-based pricing, so I'm going to double click on that for a minute. NAMIC published a policy paper titled Big Data, Artificial Intelligence, and Risk-Based Pricing, dispelling 5 common myths. So, what are some of the key myths that you identified, and why is it important to address them?
Sure. First off, I think it's important to address these unfounded notions or misunderstandings because they are currently driving a lot of the policy conversation with respect to AI and insurance. So, the first misconception that the paper addresses is the idea that insurance can be regulated like any other industry. At the state level right now, there are these foundational AI bills that are taking a one-size-fits-all approach to all industries that doesn't necessarily fit all, especially with an industry like insurance that is priced prospectively and at its core is a risk transfer product. So that's the first myth or misconception that the report addresses and really dives into to level set at the outset. Then the analysis looks towards the competing concepts of fairness and this misconception that fairness in insurance should be equal prices and access for all consumers. But what we do in the policy analysis is dive into how such a concept would disrupt the insurance product at its very core. Fairness in insurance, as recognized in insurance law, is accurately matching that rate to risk. And from there, the policy paper dives deeper into that fairness concept, and it also explores these concepts of bias and disparate impact and how those concepts are incongruent with existing insurance law. But in every one of those myths identified in the analysis, these are ones that are really driving the policy conversation today. So it was important for NAMIC to get out ahead of those to avoid some dangerous policy. And I really encourage everyone to take a look at it.
Yeah, I think part of what you make the case for in the paper is that AI actually enhances the precision of risk-based pricing. So how does it actually do that? And then what would the benefits be for both insurers and policyholders?
Yeah, the potential benefits there are incredible, given that the foundational practice in the business of insurance is, again, accurately matching rate to risk. Leveraging AI models to enhance that precision can not only uncover things like insurable risks in traditionally uninsurable areas or asset classes, but when you get increased precision in pricing, that also naturally drives competition, which ultimately benefits consumers from a price and availability standpoint. And the policy paper and analysis goes into a lot more depth on how different AI models enhance that precision, but that is the ultimate beneficial outcome from that.
And just in your work with the industry, what safeguards do you see being put in place to ensure that AI-driven pricing models remain fair and non-discriminatory?
I think for starters, if we use fairness in insurance, meaning accurately matching rate to risk, and use that as the guidepost, the standard for ensuring fairness in insurance pricing is through actuarial soundness and that prohibition on unfair discrimination. So I can point or would point to a couple of things. In terms of risk-based pricing, like we spoke to a little bit ago, and those legal standards, we have the prohibition on unfair discrimination. We have rates need to be actuarially sound. Those data points need to be correlated to risk. And in terms of actuarial standards outside of just existing insurance law, there are the actuarial standards of practice to abide by and guide work in this space. And the list really goes on in terms of a number of different safeguards that already exist today that can be applied very similarly to ensure that any AI-driven pricing models are compliant with those existing legal standards in the insurance code.
Okay, so Lindsey, why don't we look ahead? Starting with this, maybe where do you see AI regulation in insurance heading over the next few years?
I think there are probably two answers to that question. There's where I'm hoping AI regulation will head, or at least where we're really pushing it to head from NAMIC's standpoint. And then there's separately this potential path where AI regulation in insurance continues down the same road it's going right now. If I start with what we're doing from a policy perspective at NAMIC, we are focusing on getting policymakers to again view AI through the lens of it being a tool, and the underlying use cases or actions are the things that should be the subject of regulation, and then identify any other existing gaps. Because often those actions that AI would be used for in insurance are already addressed in existing law. Now, to do anything but view AI through that lens of it being a tool, really threatens or results in overregulation and even dual and conflicting regulation. And that's the road that insurance policymakers are on currently. We're already seeing that in things like Colorado Senate Bill 21169, New York DFS Circular Letter number 7, and the NAIC AI Model Bulletin to a certain extent. All three of those examples have standards in them, like bias testing, prohibitions on disproportionate negative outcomes, disparate impact, when using AI or big data, which those standards do conflict with the existing unfair discrimination standards and actuarial soundness standards that currently exist in insurance law. So we continually try to get out there and advocate on behalf of our membership and the industry to focus policymakers on viewing AI through the lens of it being a tool to avoid those dual and conflicting regulatory results.
Okay, so from the insurer's perspective now, what steps can insurers take to prepare for upcoming regulatory changes and just ensure that they remain compliant while still leveraging AI technology?
Right. As I think has been evidenced by our conversation today, AI regulation is a very dynamic space right now. There are a lot of moving parts at the policymaking level, so I would say one of the best steps to take is to engage in and collaborate with your trade associations and partner really closely with your legal and government affairs teams just to keep up to speed on what is happening in the space and what the underlying concerns are of the regulators and policymakers as we work our way through this. Nothing is completely ironed out yet, and I do foresee this being uncertain at the policymaking level for a little while yet.
Okay, Lindsay, just to wind up the conversation today, you're really kind of in the thick of this, right? Given your role with NAMIC and the work that you do with both policymakers and the industry. So, as someone who's really kind of deeply involved in both the legal and the technological aspects of insurance, what excites you the most about the potential of AI in transforming the industry?
I have always been a tech optimist, but even if you don't find yourself in the same boat, it's hard to deny the staying power that AI has across the board and the potential it has for our industry specifically, just given that, again, the foundation of AI is data and the foundation of our industry is really data as well. I think a lot of tech trends or advancements over the past 2 decades have maybe been blips on the radar, but I equate what's happening in AI advancement and its potential to change and benefit things to almost the onset of the internet age and maybe even more impactful from the consumer experience to the way we do our work. There's a lot of benefit there and really a lot that is yet to come.
Lindsay, thanks so much for joining us today.
Thank you so much for having me. It's been great to get together with you again and continue our conversation from Chicago.
Yeah, it's great to see you again. So that was a timely and thought-provoking conversation with Lindsey Klarkowski. As we heard, the regulatory landscape for AI and insurance is still taking shape, but the implications are real and growing. From dispelling myths around risk-based pricing to shaping more practical, industry-aware regulation, Lindsay and the NAMIC team are helping insurers strike the right balance between innovation and accountability. If you found this episode helpful, follow or subscribe to the JD Power AI and Insurance podcast wherever you listen, and share it with your colleagues in compliance, data science, or policy. I'm Michael Vermillion, and we'll see you next time.